now to move on, let's introduce a bit of about trading products that are available on SGX. Okay, so before we go directly into the products, let me introduce you to tradable assets. So just now I keep mentioning trading stocks because, well, I'm a professional stockbroker, but there are many 4 asset classes that you can be trading, right? Of course, now there is one more, cryptocurrency, but well, it will fall under more of what I will consider commodities, right? So first of all, equities is stock, fixed income is bonds, there's foreign exchange, and there is foreign exchange your currencies, and there are commodities, right? Commodities will be like gold, oil, sugar. Okay, so let's go into them one by one. Like I mentioned, equities are stocks. They represent the ownership of a company. They are listed on a stock exchange. Uh, they are a higher risk product in terms of rankings after bondholders. What we call ranking is when, in terms of, if something happens to a company, bondholders will come first, then shareholders, right? So it's a bit higher risk, and the volatility for stocks definitely higher than bonds, right? So we cover bonds that we call fixed income. So a bond is like an IOU, to say that a promise to pay back a certain amount of money after a certain amount of time, and there's an interest involved. So bond traders are out to make a little spread, of course, to profit. But of course, there are some bond investors who would like to just buy the bond to receive uh, interest, and at the end of the day, at the end of the bond, they get their money back, right? So it's considered a lower risk asset because bond prices don't fluctuate so much. Then, of course, there are currencies. Many of you may have heard of people trading US dollar, yen, euro, and etc. These are currencies. So currencies represent the disparity between different countries. The in general, the countries which are better off have stronger currencies. So we are trading things in terms of wealth disparities, income disparity, interest rate disparities as well. Okay, so that's for currencies. Commodities, like I said, mentioned, there are many kind of commodities. What we consider hard and soft commodities, literally hard and soft. So soft will be your grains, hard will be your metals, right? So there are stuff like oil and gold that are commodities that you can trade. But normally trading commodities requires a bit more specialized knowledge in the commodity itself. So typically, normal retail investors, I would suggest just looking at gold. Well, gold is very simple, right? Okay, so there are different kinds of trading products around, but for today's presentation purposes, we would like to just zoom in on warrants and daily leverage certificates that are listed on SGX. Okay, so for warrants, warrants are sort of an option. So it's a right to call option is a right to buy something at a certain price at a certain time, and put option is the right to sell something at a certain option at a certain price at a certain time, right? So when you see one of these codes like this, HSI number MB ECW number, and with the at behind, these are likely to be warrants. So how the nomenclature is here is that the first part, HSI, will say is Hang Seng Index, and then the numbers will be a strike. So we say strike price, right? So this is the strike number in this case, because you are talking about an index. Then MB is Macquarie Bank. Macquarie Bank is the biggest warrants issuer on SGX. ECW is what we call European call warrant. So CW is a call warrant. PW is a put warrant. So, and then the numbers behind are expiry date, in year, month, day. And of course, we'll talk about this SIP thing a bit later on. So the movement of warrants, the price of warrants, how they move, depend on strike price, rate of return, movement, how it moves with the underlying. There's a time decay element to a warrant because it expires. So when it goes closer to an expiry date, it's worth lesser. And of course, there's implied volatility. Implied volatility is how much the underlying asset, whether it's a stock or it's an index, if it moves like this, so is low volatility. If it moves like this, then it's a high volatility, right? So there's an implied volatility to what you're trading. Then there's a conversion factor, means that certain, let's say, warrants of a stock, how many warrants equals to one stock, something like that. Okay, so this is a very simple chart of a kind of expected return that you get from a warrant, profit and loss. Okay, so let's say we look at the green line, we're talking about call warrant. Anything lower, the call warrant is a right to buy, right? So if I can buy cheaper than if I can buy cheaper and sell more expensive, then I make money, right? So when the price of the underlying asset goes up and I can buy cheaper because I have a call warrant, then I will make money. Before that strike price, this amount of money lost is the amount I spent on the warrant. The opposite is true for put warrant, which you have the right to sell. So if the price is lower, if the price of underlying is lower than the strike price, you are making money. And if the price of the underlying is higher and you can only sell at that price of the strike price, then you will be losing the money you spend on the put warrant. So something simple like that. Here are some graphics on trading of warrants. We're looking at a put warrant over here. And so put warrants is the right to sell. Like I said, when you buy a put, you want the price of the underlying to go down. So we look at this graphic here where you see the chart. This is a candlestick chart, by the way. So you see the price is going down, and over here at the same time frame, the price of the warrant is going up, right? I'm only going to cover all these in general because we have specific courses on warrants. So since today is basics, I'm only going to introduce everyone generally to the idea. So if you want to find out more, we'll cover this later on in a section where to find out more information and where to sign up for specific webinars on these topics. Okay. So next, I'll introduce to you this type of product called a daily leverage certificate. So other than warrants, there are daily leverage certificates listed on SGX. We call them DLCs. So DLCs can be on indices, or it can be on single stocks. And the DLCs listed on SGX not only cover Singapore stocks, they cover Hong Kong stocks as well, right? So for DLCs, you can go so-called long or short to exploit up or down. So when you are buying a long, means you think that the price of the underlying is going up, then you buy a long. If you think the price of underlying is coming down, you buy a short. And there are different amounts of leverage ranging from 3 to 7%. Okay, so it's again a product, just a trading product. It's not trading the actual share itself. So there's low capital outlay, and compared to warrants, there is no such thing as time decay because warrants have an expiry date. This does not have an expiry date. Okay, so okay, I say that this does not have an expiry date, but for technicalities, there is always a date listed behind as an expiry date. Okay, again, for more information, I'll introduce you later to where to find more information on DLCs and where to sign up for specific courses on DLCs. So DLCs are also this kind of long, strange names on SGX, but they always start with DLC. Okay, so if you see something with a DLC in front, it's a DLC. And SG is not Singapore, but SocGen, which is again the biggest issuer of DLCs in Singapore. And 5 times means this is 5 times, so this can be 3 times, 5 times, or 7 times. And then we go long, then what is the underlying? Again, this is using HSI as an example. There's a date behind, but for DLCs, you do not need to worry about the date. Because at signifying SIP, which we will talk a bit about later. And for single stock, the only difference is that usually we have no date also behind for single stocks. Single stocks are usually 5 times only, and there is a name of the stock behind. Okay. So for illustration purposes, I have a very more recent case study of Xiaomi, which warrants are either Hong Kong stock, but DLCs are listed on SGX. So you see, Xiaomi has been on uptrend for the past few months, right? So how do we exploit or how do we trade this if we are not trading Hong Kong? How do we trade it through a DLC on SGX? So first we look at this because it's going up, right? So we look at parts where we might think that it's coming down. So if you look at this example on July 22nd, there's a what we call a down signal. A down signal. Again, trading, looking at charts, we have a lot of other causes specifically on reading of charts. So a bit of an introduction. So this kind of signal, the red candle here signifies it's going down, and indeed it came down. So if it will correspond to the DLC action over here, where this thing starts to go up, right? And then if you see it, this point, it stabilizes for 2 days, and over here you stabilize for 2 days. So if you are trading the stock, you would be selling at 1564 and you'll be buying at 1486. So you're making about 80 cents return on a almost $15 stock. However, if you're trading a DLC, you are only spending 41.5 cents to buy over here, and you're selling at 57 cents over here. So in terms of percentage, that's a higher percentage, so it can be more profitable to be trading a DLC, like 5 times, right? So next we move on to since it's a bull market for this stock for this period of time, we are saying that how do we exploit this swing, okay? Because over here, this is on a 26th August, there was a so-called a buy signal on the chart for this green candle over here, this big green candle at a very high price to signify that the price might move higher in the short term. So if we see the corresponding prices, it went from 1916 to 2660, but over here it went from 42.5 cents all the way to $1.65. So as you can see, can be very profitable to be trading DLCs. Okay, so as a final section, like I said, that a lot of things in the last section about the products were very briefly introduced. So the next step is to find out more about how to trade these products and where can we find more information, and where do we find out about other causes specifically on reading of charts, also these warrants as well as DLCs. So first of all, I'd like to cover all these. So first of all, for the SIPs, to find out more about trading SIPs called specified investment products, do bring your phone to your screen and scan this QR code, which will bring you to this website, sgxacademy.com/SIP, and you can go through the learning module there. Once you completed the learning module, you will be able to trade SIPs. Okay, and the next part is SGX Investor Resources to find out more information on companies and on products that are listed on SGX, and also on causes that you can find in order to learn more, especially on charting as well, how to read charts and all that, and what are buy signals on charts. You can again scan this QR code, and it will bring you to this website, and you can find out more. So for those of you who have your handphones handy next to you, you might want to take a picture of this or scan this and save and bookmark this website. Okay. Next, like I said, mentioned, Quarry Bank is the biggest warrants issuer in Singapore on SGX. You can visit them at warrants.com.sg, where you can find out a lot more. You can sign up for their daily newsletter, as well as sign up for their upcoming workshops to learn specifically about warrants. Because like I mentioned, we only briefly covered them just now. Okay. Similarly, you can go to dlc.socgen.com to go to SocGen's DLC website. Again, once again, they're the biggest DLC issuer in Singapore. You can sign up for their newsletter as well as sign up for their specific causes to trade DLCs on SGX. Finally, do visit SGX Academy's website constantly to find out about more causes, so that you can learn more about stuff on SGX Academy. And some causes Okay, now there are only live webinars. There may not be as many paid courses happening right now, but some of the paid courses are can be funded by Skills Future Credit. So look out for that option when you're signing up for your next course. Okay, so that's all the time we have tonight. Thank you everyone for attending this webinar. Do look out for other webinars we have in store for you, and do search up all those websites to learn more and make use of all the investor resources that are available. So thank you very much. I hope to see you at the next webinar.